This is an update because the combust Mercury retrograde that happened on Friday that causes cycle highs immediately caused the market to decline. That happens about half the time. Today is August 2nd. What we want to do is update you before Monday so you can reconfigure your thinking about the next weeks and months, and we can allow you to recognize the fact that we're still bullish in the long term, but we expected a fourth wave starting somewhere around the 11th of August. It looks like it just started on August 1st. And the Elliott wave pattern, which preceded this, was highly unusual because the size of the one wave and the third wave were approximately equal 3 or 4 days each. The fifth wave of this rally took less than a half a day. And so that can happen, but again, it's unlikely. So the probabilities of such an event happening were lower, and yet it did happen. And so, as we have mentioned, there are many cycles in the market moving simultaneously, and that the large cycles are invisible. In other words, we don't have enough data to get the exact same phasing of all of the short-term cycles that we had in the past. In other words, many, many years ago. And so for that reason, it's almost impossible to know exactly where each high is and exactly how significant it will be in context of the structure. And so now what we're looking for is that fourth wave of the higher order, which is going to take some period, which we expect to take about a month or so, is already in place. So over the next month, potentially almost 7 weeks until the late part of September, we're looking for a correction. We're not looking for a crash. We're not looking for a dramatic decline, but we are looking for a correction, and it may be very choppy because fourth waves can be very congested and choppy and not very, they're very untrending in nature. And so the month of August, the dates that we gave in the past video, having a high around the 11th and potentially on the 18th, they're still in place. However, the price action may not go up and take out the highs anymore. Now, the matrix channel was one of our confirming indicators. We needed to see the market break above it, which it did, retest it, which it did, and then take out the first high that it made, which it did not do. On Thursday, it came slightly higher than the Monday morning high, but it did not continue up. That was the point that separated a bullish scenario, immediate bullish scenario, from a more bearish scenario or a less bullish scenario. And on Friday, the size of the decline confirmed that because the decline was big enough so it took out some lows that it shouldn't have taken out if we were still in an uptrend short term. Okay. However, given the strength of this market that has been consistently not coming down, it's still possible that we are in the developing part of a blow-off of a parabolic move up, in which case the fourth wave, which would ordinarily come back down into the fourth wave of lesser degree, which is around 6,100 on the futures, it may not. And how do we know? It's basically very simple. If we can break above the 6,400 area and get to the 66, 6,700 area and pull back and hold, as the 60-year cycle has been proclaiming, then we're still on track for an extreme blow-off that's in progress. And we'll know it because the market shoots back up quickly in the next month, in the next 3-4 weeks. Now, we're looking for a low on the 7th of August anyway, a couple of days from now. And the highs in the next few weeks, based upon the short-term cycles, are the same as we expected. The key thing is how strong is the action. If the action can take out the highs and keep going by the end of the month of August, we're looking for a high around early September, and then it would pull back in September. The low in September conceivably could be around the 6,300 area, and therefore we're on track along the path of the 60-year pattern. If not, it'll take a little bit longer because the low in September could be in the 66,000 to 6,100 area, and it'll just take longer to develop the rally that we're expecting. And then the high, instead of coming in late October, early November, based upon the 60-year cycle, could come in as late as March of next year. Again, extremely higher prices are due. What is likely short term are very similar. We're looking for a low on the 7th of August, another high on the 11th, another low on the 13th area, another high around the 18th, and such. We're looking for the same story, but the price action could be more severe on the downside because what happened on Friday is probably not over. It could go down another day or two, could go down 2 or 3 more days and finish up the first leg of this fourth wave. Oh yeah, I also want to remind you that the market at this point is in a situation where surprise events can potentially take place over the next days and weeks, and that it is a time where extremes can take place, and you always have to maintain control over the risk of any positions that you put on. One of my students actually came up with a cycle, multiples of the 18.6-year cycle in the past, 37 years ago, and many others in the past, actually called for earthquakes coming up very, very soon in the next weeks. And if that happens again, that could be the type of shock we're talking about. And even the 1906 stock market, which we've repeatedly talked about 119 years ago, does line up with this year, and that's when the San Francisco earthquake, the huge one, took place in 1906. It also could line up with 2001, with the 24 years ago. Venus has an 8-year cycle, Jupiter has a 12-year cycle, so 24 years ago has some similarity also, although the price action then is much more bearish than ours. All right, so there could be some shocks and surprises that come, not necessarily on the economic front, but nevertheless, they would probably affect the market to a certain extent, at least short term. All right. After this, however, we are still bullish. Probably after September, the market will resoundingly take off, and potentially even earlier, but most likely it will take place after the end of the late part of September. The market should rally dramatically and take out the all-time highs and keep going. We're still looking for new highs, significantly higher highs. We were looking for 7,600, and we still are. It may take longer, though. It may drag out until next March before it's done.